Hi, this is Pat Moorhead with More Insights and Strategy, and we are here for my second awesomest podcast on Friday. It is FinTech Friday, starring Melody Brew, Vice President and Chief Analyst of the FinTech swim lane, and to be announced, a new swim lane here. How are you?
Other than cold, I'm good. The Texas freeze.
Yeah. So for everybody tuning in here, we don't get a lot of snow or cold here in Austin, and my gosh, it was 22 degrees here today. We have no snow plows. We have no salt. We have, I think, 2 sand trucks for a couple hundred square miles. That's about it.
Definitely not prepared for this. Yeah, my kids are on day 2 of snow day, so there's that. But yeah, I mean,
But do you have food? Is the food in the
absolutely.
burbs, is it cleared out, or do you
Yeah.
actually?
So, with 3 kids at home, I'm always pretty well, 3 boys at home, I'm always pretty well stocked with food. But I do have friends who went to H-E-B and Whole Foods the day before we were expecting the storm, and there were pretty empty shelves. So,
Getting smarter.
panic.
There was a lot more square footage in the burbs too. I live downtown, and I've got my tiny little closet because downtown people, they don't cook. They go out to restaurants. Guess what? The restaurants are closed.
Yeah.
And there's like no food. I did run out of food last year, but anyways, I don't want to bore people with our issues. We have an exciting show today. We're going to talk about a new, more insights and strategy practice. And based on the timing, Mel just might be heading it up. We're going to talk about crypto's tender moment. PayPal's rough week on the street, Affirm's super app. I'm glad I know what that is. I think that might have been episode 5. And our acronym of the week. I'm going to keep you in suspense till we get there. That's part of the fun. But no, why don't we start off with the new More Insights and Strategy Retail Technology Practice. So we're in year 10 at More Insights and Strategy, and we've typically taken a horizontal point of view of technologies as industry analysts. And we got some initial pickup with the carrier vertical. Some people call it telco, some people call it carrier. And then Mel came in, and she has headed up a very successful FinTech practice. And Mel and I were having a conversation and just talking about kind of, what's next. And, we came up with the retail tech practice. So Mel, I'd love to hear from your point of view, because you're so close to this, the affiliation between FinTech and retail. Because, the layperson might think, it's a bank and a Kroger. How are those two things aligned in any way, shape, or form? Even though in every Walmart now you do see a bank. But anyways, I don't want to confuse anybody here.
Yeah, I mean, that is true. That those things are tied very much together. But I think really from the e-commerce boom that we saw from the pandemic, it's just put this pressure on retailers to reimagine everything, from their out-of-store experiences to online discovery for brands and retailers, checkout, payment options, buy now, pay later integrations, the increasing amount of data used to target customers. The transition to cloud, that's been accelerated tremendously. I mean, we're looking, something that may have taken companies, maybe 10 years is now they're looking at like an 18-month roadmap to transition to cloud. And all of that's necessary. If you're looking, at in-store, you're looking at autonomous checkout, contactless checkout, various wallet options. Point of sale is no longer just a cash register, right? Like from the days back when you were in the point of sale business. Companies like Square and Toast are offering staff scheduling, payroll, loyalty programs, inventory management. They're not just competing on price anymore, it's the whole experience. But what retail and FinTech have, in common with a lot of those things, obviously, is the payment part of it. But what retail has learned from the FinTech space in all of this, in customer experience, data, and security, they're all really tied together. So it really makes sense for the two verticals to kind of live hand in hand.
No, and I really appreciate you seeing the two. This is why you run one practice, now 2, And we've had some really good follow-up from folks. And if you are a tech vendor out there in the fintech space or the retail tech space, hit up Mel on probably LinkedIn would be the best place. So why don't we move to the next topic here? And this is crypto's tender moment here.
Yeah, I always like to have some sort of like fun title or pun, but I feel like also there's just never a week where we don't somehow have to bring up crypto. But what's happening is there are several states in the US that are trying to make crypto legal tender. As you know, El Salvador made it their legal tender in September of last year. At the time, 27% of US citizens said that they would support making it legal tender here in the US. So, sort of the politics behind the scene here is surprisingly, this has become sort of a red issue. In Arizona, a bill was introduced by a Republican senator, and it would have to be signed into law by a Republican governor. Same thing in Wyoming and here in Texas. There has been talk of cryptocurrency becoming legal tender. So, two things that are happening here that I think are really important to call out. One is the decentralization and the conservative sort of right-wing overtones to this don't really match up. And some people have said, people should step away from this because they don't want, to sort of cloud the ultimate vision of decentralization for cryptocurrency by being too right-wing. And the Constitution makes it illegal for states to issue their own currency. So there's that. It also is just a real pain for merchants to have to handle that exchange. There could be a really massive shift or swing in the price of cryptocurrency between the time that they accept something for a goods or service and then they have to do the conversion. So it really doesn't make a whole lot of sense. I think it's a little bit more of like a stunt than anything else, but worth just mentioning that's something that's going on.
So it's interesting. You and I never talked about my escapades in crypto, and it was ugly. And I lost. I didn't lose as much as a lot of people, but I got in right before the fall. The only thing that saved me from losing 50% of my investment was the fact that I needed some cash at the end of the year, and so I cashed out before the big fall. But I got enough to, enough experience in the Coinbase app with 4 or 5 different currencies to make me never want to go back again. I got to tell you, I have a story of a good friend of mine. I will keep his name out of this, who said, "Yeah, I'm putting some of the company's money into crypto as a hedge against inflation." I'm just like, okay. He lost half his investment that he put in there. But it was a hedge against that 7% inflation on cash. But anyways, my affair with crypto, I put the brakes on that. But,
it's over. Well,
it might have. You never say over, but
if it
it's
dips
over for
below
the
30.
moment.
Yeah. I just think, crypto right now should be something that you buy and like you did, you buy it and you sell it as an investment. You don't spend it.
Yeah.
It's not used to buy things in my opinion. So just thought that's an interesting thing that's happening with their tender.
Yeah, I mean, Coinbase was a nightmare. Coinbase app for me was a nightmare because it was almost impossible not to do take this out every week. And I made the mistake, I moved over to $10,000 and it ended up coming out every week. I didn't notice it for 3 or 4 weeks. And I was like, what in the heck happened? And then I'm trying to look for please do not take out every week. But anyways, folks, I don't want to scare you away from this stuff. Go in this. I want you all to have laser eyes and diamond hands, okay, and make a ton of money here. But let's move to our next topic.
Although this is not investment advice.
Oh yes, yes. This show is definitely not for investment advice. In fact, do the opposite of anything we might recommend because it's for entertainment and information purposes only. Thank you, Mel, for that. You may have saved me a lawsuit. Let's move to the next topic. PayPal had a rough week. on the street. Mel, but could it be any worse than Meta?
No, no, but I mean, come on, we all saw that coming. Yeah, so the company actually just missed analyst expectations, but issued pretty conservative guidance. The stock took a big hit, down about 23% since the earnings. When you look at just what happened in the past quarter, they've had supply chain issue, obviously inflation, and then further shutdowns that have, kept people from buying, spending, and of course, traveling. So what's interesting here is that the company now has said that they intend to concentrate their efforts on users who spend more. So 1/3 of their users make up for a vast majority of their revenue. So this is an interesting thing. Concentrating on their users means on their, their power users means spending less marketing money trying to attract the smaller value customers. So adding services to their features like that to attract those high-end users has proven to increase their LTV in the past. So I think it's a sensible reaction to what's happening in the economy right now and to kind of targeting those customers that they know are, they're repeat customers, they're active users, they're really active users that are higher value. But it's sort of doing the opposite of what a lot of fintech companies are doing out there, which are saying, we want to provide services to everybody. And these guys are just saying, nope, we just want the big spenders.
Yeah.
Like that's who they're aiming for.
Kind of like a platinum card or something like that, right?
Yeah. So they know who those users are. They know that they use they're active on the platform and they make up for the majority of their revenue. So that's, they come out and said that that's what they're going to concentrate on. In general, obviously the market didn't like it, whether it was, that particular thing or just the earnings in general, but the company is still, positioned to process $1.5 trillion in transactions this year. And that's up from 1.25 trillion last year. So
do you consider, it's funny, what's new becomes old. And I'm wondering if you consider PayPal, are they a legacy company now? Or is that being a little bit too harsh?
They are. I think that their brand has always had a little bit of that, I think probably when you look at who that 1/3 of their customers bringing in the majority of their revenue, they're probably older users who have a little bit more money. They're spending more, but they're familiar with the brand and they're comfortable with it because they don't necessarily want to start using something new. It's like the difference between a Robinhood customer and a, TD Ameritrade customer or a Schwab customer, right? The value of that account is vastly different. So I do think that they have a bit of a brand struggle. They have Venmo and that's increasing and they're supposed to be, introducing some, what they're calling super app features into the Venmo app. So I think they can grow that and concentrate on this, power user. They're still, $1.5 trillion in transactions. So
there we go. Gosh, I remember when I got my E-Trade account, I was like insane. You're not going to talk to a broker?
Yeah.
You've got to be kidding me.
Yeah.
At that point, was in .com 1.0, and you could pretty much throw any money into everything, and you would make something if it was in tech. Big high flyers were Cisco, Sun, right? Yahoo.
Yeah.
It was crazy.
Well, that's a really good point too, is that I think that we're seeing a little bit of a correction in the valuation of these fintech companies where they're starting to be valued more like banks than tech companies, so that could account for some of this too. Like no longer is it, obviously they are making revenue, but there's a lot of these companies like Robinhood who, weren't making any revenue or they're not revenue positive, but they're still, valued in the multi-billions. But should they be valued more like a bank? I think we talked a little bit about that last time. But
yeah, so we talked a little bit about sounds like PayPal has an aspiration for a super app, but Affirm absolutely has a super app. So let's talk about that.
Yeah, Affirm announced that it is now a super app. So
you just show up and you're like, I'm a super app.
Yep.
So first of all, can you explain what a super app is? for the
Yeah.
audience, or go back to, I don't know, edition number 5 of FinTech Friday?
Yeah, yeah. So a super app is just an app where you can manage a lot of different things in one place. So rather than, kind of toggling from app to app to get different things done, you can manage your finances, you can pay for travel, you can book hotels, you can do a number of things. You can chat, you have social media, you have all these different things all in one app. It's
And the notion, right, just so I get this straight, is, hey, I'm in one app and it's just so much easier to do something that's related to it. Hey, I've got all my credit card information in,
yes.
therefore it's got to be easier to do my travel.
Mhm.
Okay. Something along those lines.
Yes. Yeah, and
Got it.
so you can pay for things, you can shop for things, you can browse things. There's all the different things, and I think it's a little bit of the trend of like we had bundling, and then everything was unbundled, and now we're kind of coming back to this bundling, and I think we're seeing that in a lot of different areas, not just fintech, but software and all other
It
areas.
is the wheel of innovation in tech,
Yeah.
right? And I call it disaggregation and aggregation, but all the way back to mainframes, which are together. And then mini computers came after that. And then we saw PCs. Then we saw the web, which basically pulled everything back in.
Yep.
And then we went to e-commerce that kind of split it up again. We had social, we added mobile, which kind of brought it out again. So it is definitely the wheel of technology.
hmm So what I think is interesting about this one is that I've said this before, that I think buy now, pay later is oddly like this indicator of so many different things that are happening in like so many different economic factors, right? Like spending habits. I mean, we saw that like with what was happening, with Peloton, and now look at Peloton. Um, Retail trends, what people want to spend their money on, when people are spending their money, like as in when stimulus checks arrived, that was like it was as if it was Black Friday. So buy now, pay later really has sort of kind of become this barometer for that, which is interesting. And so I guess, in a way, this sort of affirms that notion, and that maybe they are positioned to be a super app, that they could pull this off because people like them. They've done a lot of things right. People are, I mean, definitely their stock price is showing that this is all the things that they've done lately is well received. They also introduced a savings account recently with a 1.3 annual percentage yield, which is higher than average right now. I think the average is like a 0.7. And I like that because it puts they can put automatic payments to keep people on track. So people are saving, but they're also keeping on track on their installment plans, which has been a problem, with a lot of these buy now, pay later plans of people getting in over their head. So they can kind of plan for savings with a higher yield, but also have this backup to be able to, pay for their things that they've bought. So it gives, a little bit of stability there. They also just launched a Chrome browser extension that lets people use Affirm at almost like any retailer. And they saw that when people are shopping with the Chrome browser, they're 30% more likely to use Affirm at checkout. So these guys, they've got the magic touch right now.
It is so funny. This whole notion of convenience even
Mm.
goes all the way back when I was at Alta Vista, where we were one of the biggest ad people because we had the best search at the time, and literally we just funneled people in, and the convenience of it being there. You have to really watch yourself between kind of being completely annoying and people just turn it off with some of these plugins. But it is so funny how the game, it's almost like there's nothing new. It's just kind of reformulated, put on its head, spun, like a cube. But it is so funny. I just cracks me up like a super app. For what it's worth, the Chinese really started this whole super app thing,
Yes.
right?
Mhm.
When it came to, and it all started with messaging. This whole notion of iMessaging having a stranglehold on consumers is not like it is here in the U.S. and therefore these chat apps popped up. And then everything started from there. And then you had bots. I mean, we kind of make fun of bots now here in the United States and even most Western worlds, but bots are alive and well in China and their apps. And sometimes they're real people, and sometimes they're not. So in a way, their super apps are a little bit more evolved and get more use than ours do here in the States.
Right. Well, think about how much you use chat. I mean, I use chat, between Messenger and chat, between, personal and work, we use chat all the time. So if you integrate, I can send you some money, or I can send you a recommendation for a restaurant. Oh, then you can actually then book that restaurant because I sent you the recommendation. You can pay for dinner, all those things. It just all integrates really easily into where you already are. And then it learns all of those things about you through data and recommendations, gives you all the things that you want. You're not bothered because you're like, why am I getting delivered this thing that I don't need or want? It's actually based on your past experiences with this app. And it's not, from 5 to 10 different apps, it's one. So it's actually learning your behaviors and your needs and your wants. And so it's going to serve you better. So it does make sense for it to start with chat from that perspective, right? You can see how that evolved.
Yeah, absolutely. Would you say something like Facebook is a super app? I mean, they're trying to put everything in. Okay, actually probably bad example.
I think they want to be, but
the whole VC thing, and again, I'm not a VC. I'm like a junior investor, angel investor at this point. But it's so funny. It kind of crack up the notion of so many of these companies is go in, be a category killer in something, but the business is eventually to take over something else. It's just a stealthy way of getting into it. But no, I appreciate you bringing in these super apps. And because my gosh, I have a lot of fun with them, and I hope the audience does too. And hopefully they're getting educated on it. But this whole buy now, pay later thing, you remember my first comment on that was just like, oh, it's kind of like a credit card, right? Like, no, it's not. This stuff is different. And this is why the demographics are different for these type of folks. And it's getting super, super popular.
Yeah, it is. And, there's some really open space there too, because banks aren't necessarily offering it, but consumers have said that they would be more likely to take an installment loan if it offered by their bank rather than to use an app. And there's probably a little bit of just safety and security, bank packed into that. But there is some room there for other players to get into the space. It seems like it's just this massive, thing that's happening right now, but it's actually the saturation is fairly low. So I think we're going to see more of it as long as they can keep the fraud and the overspending under control.
As long as they can do this. I love that.
Yeah.
I love that. Remember people used to be afraid to shop online?
Yeah.
All right, let's do our home loans online. I've tried it.
Yep.
Didn't go through, but I tried.
Yeah.
Hey, let's hit the acronym of the week. Y'all know this is my favorite part because this is where I learn so much. Sometimes I look like a fool. Sometimes there's an acronym I actually use. I just forgot that I knew it, but I hadn't used it for 10 years. It came in. But our acronym of the week is TCFD. It just flows right off
the
tongue. So what on earth is TCFD, Mel?
It is the Task Force on Climate-Related Financial Disclosures.
Wow.
Not one you've ever heard of. So this one is actually known better by its chairman, Michael Bloomberg, than it is by the actual acronym itself. But I think this one's really interesting because let's start out with this. It was formed by the Financial Stability Board from the G20 to develop sets of recommendations for climate-related disclosures so that people can use informed information for like investment credit, insurance underwriting decisions, and enable stakeholders to understand financial systems exposure to climate-related risks. So what this began was like a voluntary set of recommendations has now become part of regulatory framework in many different places. So the EU, Singapore, Canada, Japan, South Africa, UK and New Zealand are also supposed to be adopting these, like mandating these climate risk disclosures in the next 2 to 3 years. So just an interesting thing when you look at, obviously the economic or the environmental impact of what's happening, with climate risk, the economic impact of what's happening with climate risk it's a major impact on investment decisions. Everything, when you really think about it, like everything from damage to a building in a storm because of global warming or whatever, to the investment decisions that people make because the companies that they're investing in are doing the kind of work that they want, that for better environmental outcomes. So if you kind of look at this as like a step, right? We started out with CSR. Then we go to ESG, which is really, these are all good things. I'm not saying any of these things like aren't good enough, but they're steps of like CSR. We're going to come up with some programs. We're going to volunteer. We're going to do some things, and we're going to try to, make some impact. Then we have ESG, which again, all good things, but hard to measure. And even when they are measured, hard to report. And there's no real like actual framework around it that says, here's what you have to report, here's how, and here's what's mandated. And so this TCFD will hopefully set the standards and come into law to make it mandatory for companies to disclose the amount of, what their carbon footprint is, what their risks are, what their gains, all the things that we're trying to measure when it comes to things like ESG, but have a real impact on the environment.
Is this, people who might want to throw stones at this might say, hey, this is just a way to cut credit off those people who, we don't like what they're doing related to the environment, or we want to lower the value of their assets, or is there any of this going on? Is there any overtones, or what's the opposite end of this? Is there any discussion about this? Why it might not be good?
No, I haven't really seen anything to that effect. What I have seen, if you look at the people who comprise the council or the board, whatever they call it, you've got people from different countries, you've got people from different sectors. It's not all just, environmentalists who are trying to put crack the whip, right? Yeah. It's all different sectors. So I think there's a pretty fair representation that would make that pretty hard to do in terms of, cutting people off or, not allowing access to certain people. There's somebody from, I think it's their ESG department or sustainability investment from BlackRock. And, BlackRock has, although they say that they're, the best in sort of ESG investments, they've been put to the test lately with their investments in China. And so, they're I don't necessarily love that representation on this committee, but there is a representation. So it's not one-sided. It's not somebody's just going to come and lay down the law and that there's not going to be some sort of discussion. By
the way, the other thing I learned from this segment, and thank you very much, is I was wondering what Michael Bloomberg was up to, right? Right, and here he is.
I'm Mike Bloomberg,
and he's
chairman of the task force.
He ran for president, I think, for 12 days, but here he is. I wonder what happened to him.
There he is.
Thank you. So there we go, folks. TCFD. Don't make me have to memorize this one. I will never get this right, but I appreciate it. And the question is, are you TCFD compliant? That's what we're going to be talking about next, right?
Right.
So, hey, the show goes on. We're talking about the future. There will be a next week. We're not going to freeze to death here in Austin. It is getting warm. So what are you focused on here in the next couple of weeks?
Getting warmer. So over the next couple of weeks, I'm really planning on taking a deeper dive into retail, getting some briefings set up and starting to get that train moving. And looking forward to that. And then, there's lots of other stuff happening. We're starting to get into, but not quite yet, but early spring is when a lot of the big conferences start happening. Lend It, FinTech. There's first conference in Europe and then here. So gearing up for that and just getting all the ducks in a row on the retail front.
Yeah, I was doing a little bit of research on Mobile World Congress about an hour ago, stumbled across this. Wow, MWC has its own FinTech Belongs Here page. It is one of the 5 different super areas that they have. You might want to check it out.
I might be in Barcelona.
There we go. There we
I'm
go.
telling you, everybody wants to be a FinTech. I've said it before. There's proof right there.
Everybody, look at the retail getting into FinTech. So
and mobile too. I mean, if you look at like Verizon now has a money app on their as part of where you can send, like I can set up an account and send money to my kids from their Verizon account, and everybody's embedded finance.
I just want my NFT couch from Walmart. I can pull into any video game that I want, and life will be great.
And put your feet up.
I know. I'll put it in my house, my $800,000 house next in the metaverse, next to I forget the name of the rapper that you can buy a house right next to him for $800,000. Problem is, it's not a house; it's a fake NFT house.
I swear someone might just watching this or watching any of that might just think like, what language is he speaking?
Exactly. I love it. But that's FinTech and now retail tech. We got to think about the show here. Like, what are we going to do? Is it going to be like FinTech, like, retail tech Thursday? Do we stagger? We need to think through that. Maybe if any of our audience cares, just let us know. But for this episode of FinTech Friday, this is Pat Moorhead and Melody Bruce signing out. And we hope you have a great weekend.